always lay emphasis on it. Double entry principle is not something that you can undermine. It's something that you apply every time so that it will help you when you are preparing ledgers and all other things like that. Now we'll be talking about direct debit. Now, when we're talking about direct debit occurs when a creditor is authorized to ask for payment from customer's bank. Now let me buttress my point. This direct debit that we are talking about is that when you authorize your creditor, you know, when you are owing somebody, where are you as a firm, as a corporate organization, you are owing an outsider, which happens to be your creditor. So you ask that person to ask for payment from the bank. So that's what we call direct debit. So that means when you ask somebody, authorize a creditor to ask for payment on your behalf, that means when the payment is being made to the creditor, it reduces your what? Cash book. So, but if does such thing happen and you are not notified that your creditor has asked for payment from your bank, then it causes disagreement. Then the second to the last, we have overcasting of receipt side of the cash book. When we are talking about overcasting of receipt on the side of the cash book, I would like to explain it more better. Now, this overcast that we are talking about, it can be, you can have receipt overcast or receipt. You can have receipt undercast. Now let me explain this. This receipt overcast is that when you're supposed to collect 200 naira and you collected 240 naira, that means that's what we call receipt overcast. That means in that case, you're supposed to collect 200 and you collect 240. That means you have to return 40 naira back, and that will be credited in your cash book. That is how we prepare receipt undercast. You will come across it in the question. Then receipt undercast is that when you're supposed to pay, when you're supposed to receive 200 and you receive 180 naira, that means that person will give you 20 naira back at the end of the day, because your payment, your receipt has been what? Undercast by 20 naira, and this one, your receipt has been overcast by 40 naira. That is what we call overcasting of receipt. Then likewise, you have the undercasting of payment, and here we have payment undercast and payment overcast. Now, this is the aspect of payment whereby you're supposed to give, you are to make payment at the end of the day, and you make payment of, instead of you making payment of 400 naira, then you make the payment of 380 to your customer. That means instead of you making payment of 400, you make payment of, that means you are going to return another 20 naira back. So you have payment, 20 naira payment undercast at the end of the day. These are the three things. Then payment undercast, overcast. Payment overcast is that instead of you to pay 400 naira, then you pay 440 at the end of the day. So that means that person you make payment to, we have to give you 40 naira back at the end of the day. That's what we call payment overcast. We will illustrate the way the entries, whether it's the debit side or the credit side, where they are going to, the effect that we are going to do when we are treating this. We will get to that in the illustration. So another one is a bank error. Bank error can occur in the bank during posting of items into different accounts. This is the kind of error whereby you're supposed to send the account into Tayo's account, and you mistakenly in error post it to Taye account. So that is the kind of error that can happen. So if there's error like that, your customer is Tayo and you mistakenly post it into Taye's account, then it is what we call bank error. So the way we effect the changes at the end of the day, we will see in the question. Now, what are the three methods of bank reconciliation? It depending on the examiner. And the first one is starting with cash book balance. That is another method of bank reconciliation. Then the second one is starting with bank statement balance. And the third one is preparation of adjusted cash book. That is that. I will lay emphasis on it. So this is the format for your cash book. Those information that we have discussed earlier, we have debit side and credit side. Adjusted cash book. Adjusted cash book is just when after the errors, the discrepancy has been disagreement between the cash book, then you now write another adjusted cash book in order to effect the change of the disagreement that occur at the end of the day. So these are on the left side you have balances, we have payment over cash, credit transfer, dividend, receipt under cash, and interest received. Then at the credit side we have this information. Now, another one, format for bank reconciliation statement. Because in the question, I want you to take note. In the question, they might ask you to prepare adjusted cash book and prepare bank reconciliation statement. Then the first thing is that you prepare your adjusted cash book first before preparing your bank statement. But in a question, if you are given the same information and you are told to prepare only bank information statement, this is how you are going to prepare it. Balance as per cash book, which is the balance at the end of the day from your adjusted, you'll be given in the information that balance as per adjusted cash book. Then add the unpresented check, dividend, credit transfer, receipt under cash, payment over cash, then less uncredited check, bank charges, standing order, the Sunday, the summer check, payment under cash and receipt over cash. Then at the end of the day, you have your bank as per cash book. But let me give you a hint. Bank statement is a very simple question, in the sense that in the question, in the information, you'll be given the balance as per cash book, and you also be given the balance as per bank statement. So at the end of the day, you get the exact figure of the bank balance statement. That means you are getting all the information right. So these are the techniques that are used when you are preparing a bank statement. But if you are only asked to prepare adjusted and reconciliation, then you prepare it accordingly the way we show it here. Then you now prepare bank reconciliation statement. Those information that are here that you have posted in the cash book, the only information that will just be in the bank statement is unpresented check and the uncredited checks only, and the bank error. Now we go to illustration, we will know more better about bank reconciliation statement. Now here we go. So now these are the information. Illustration. These are the information. Look at the information, and at the end of the day, you are required to prepare adjusted cash book and bank reconciliation statement for the month of July 1999. Now let's go. On 31st July, Fakunle cash book. Since you have to prepare adjusted cash book, you just write Fakunle adjusted cash book. Because there is a discrepancy, and because of the discrepancy, the information were given, and when there is no disagreement, then such information will not be given. But because there is disagreement between cash book and bank balance, you are given this kind of information of which you have to make the effect. Now, is that on 31st July 1999, Fakunle cash book show a debit balance of 3,800. Now, this is a cash book balance. This is what we are giving you. We are giving a debit balance. You just write balance BD. How much is that? 3,800. So that is that. So I told you the other time that your bank statement at the end of the day, you are handed. You will be given the bank balance at the end of the day in the question, so that you cross check whether you get it or not. Now let's go. And they said its bank statement show an overdraft balance of 940. Most of the times you'll be given the question that there is an overdraft, and anything that has to do with overdraft, you just this is a sign for overdraft. Even they might not give you overdraft, if immediately they put it in the bracket, that shows that there is a overdraft. But it is not in the case they give you such question, but this question gives us an overdraft. So they said on the investigation, these errors were discovered, of which we are going to do justice to. A check of 680 paid to NECO PLC. Fakunle paid 680 to NECO PLC has been entered in the cash book as 860. Listen very carefully. A check of 680 paid to Fakunle has been entered into the cash book as 860. Now, you want to recognize it. This is what we call payment overcast, of which I give emphasis, payment overcast. So now you have to make payment of 680 and you make payment of 860 to that such company. That means they are returning, because this is a payment, this is where you make the payment. Instead of you to make 680, you make payment of 860 in the former cash book. So that means the company will now return, let's place it 180.